was for a couple things, for questions, that type of thing. Also, if you are interested in CEP and you didn't click that little box when you signed in, just let Lori know and she'll make sure you get your certificates. But good afternoon, everyone. Thank you for being here today. My name is Denise Lickness, and I'm a senior revenue agent based in Watertown area. I'm going to go ahead and let Marla, she's my co-presenter, introduce herself.
Hi, everyone. My name is Marla Schmidt, and I am a revenue agent, and I'm based in the Yankton area. So welcome aboard today, and we hope you enjoy the presentation.
Okay, today we're going to walk through contractors' excise tax, and our goal is to make this information as clear, useful, and practical as possible for you. We'll start with a quick overview, and then we'll dig into some key points and wrap up with time for questions. If at any point something isn't clear, Marla is going to be monitoring the chat, so feel free to go ahead and ask a question. I am going to try and pause between slides so that if there is a question, she will go ahead and read the question and then answer it for you. If you feel more comfortable emailing us, that's why we did send our email address, or if you want to wait, we are going to take a 10-minute break halfway through, and we will leave time at the end of the presentation for questions. So whatever you feel comfortable with, feel free to ask away. With that, let's get started. Okay, we always have to go through this legal little thing that we have to do for every presentation. And basically I have to read it. So this presentation and the materials that accompany it do not constitute written advice to any specific taxpayer under South Dakota Codified Law 10-59-27. I just like to start out with a little history of contractors' excise tax, because a lot of times people will say, how did this come about? So basically, the history and evolution of this tax started in 1979. That was the introduction, and the state enacted the tax under the South Dakota Codified Law 1046A. You're going to hear that law along with 1046B. It started out as a rate of 1.5%, and it was designed to ensure the construction industry the contribution to state revenue. In 1984, that is when it did increase to the current 2%, and it also they clarified setting the rate at the 2% and then clarified how it applied to various contracts, change orders, and subcontractors. In 1987, that's when the 1046B started, and that was for what we call the qualified utility law. So additional legislation and administrative frameworks expanded the structure under that law to address utility construction and specialized projects. We're going to talk through this presentation on the differences of the two laws and how they apply. In 2010, an emergency legislative action was taken to subject construction contracts for municipal-owned utilities to the standard excise tax, the 1046A. It was at one point put in 1046B, and in 2010 that was set up that way. And the current application is 2%. Who needs a contractor's excise tax license? Well, anyone who enters into a contract for construction services listed in Division C of the Standard Industrial Code. Division C and that manual that they're talking about, it's what we kind of refer to as the Revenue Agent's Bible. And I've got it right here, right next to my computer. And it is got a list in Division C of construction services, and they are subject to the contractor's excise tax. If you are engaging in services including construction, building, installation, or repair of a fixture to real property, or you're engaging in repair or remodeling of an existing property or the construction of a new project. You will need a excise tax license for, you will not need one for every project that you do. You just need one. So if you're based in Sioux Falls and you travel to Rapid or Pierre or Yankton and you do projects there, you will only need one license. But you must be licensed before you start work. You do not need one for each construction site. No purchasing agency may award a contract for the construction of any public improvement unless the contractor has a South Dakota contractor's excise tax license. I used to work for the city of Aberdeen, and when there were contracts for the city, contractors were required to place bids, and then we went with the lowest bid. But if they placed a bid and they did not have a contractor's excise tax license, the city didn't even look at the bid. So that was because that is a law that you have to have a license before doing business in South Dakota. So what is excise tax? Basically, it's a 2% tax that is levied on the entire contract price, including labor, materials, markup, and any sales or use tax already collected. So with this slide here, we have two paragraphs. The first paragraph refers to 10-46A. It's a 2% tax on gross receipts and value of owner-furnished materials of all prime contractors engaged in construction or realty improvement projects. The second paragraph is 10-46B, and that's a 2% tax on gross receipts of all primes and subcontractors engaged in construction services or realty improvement for qualified utilities. And prime contractors are not exempt. There's no prime contractors that are exempt from contractors' excise tax. Well, how do we determine if it is a project that's subject to excise tax? Well, there's a couple things you can do. Is that service listed in the SIC manual Division C, that book that I showed you? If it's listed under Division C, it's subject to excise tax. But as time goes, things change. So there is also construction projects and things of installation of real property that is not in Division C. So if it's not in Division C of the SIC manuals, you have to ask the question, do the services entail construction, building, installation, or repair of a fixture to realty? What I found working with taxes, there's always exceptions to the rules. And the exceptions with Division C is floor laying and locksmith services. Those are listed under Division C, but they are subject to sales tax. Now, floor laying has a couple of different things on it, but locksmith services and locksmith shops are subject to sales tax, not excise tax. So what is a fixture? A fixture is hardwired or wired direct, bolted or affixed to real property, plumbed in, or in this case, connected direct to water or sewer. It is intended to be permanent. It is adapted to real property, and it is annexed or attached to real property. So when is excise tax due? Well, that depends on how your accounting is set up. If you are set up in the cash accounting, and we kind of went through this, if you were at the sales tax seminar, it's very similar to that. So if you are set up cash, it's when payment or the draw is received. If you are set up as accrual, it's when the sale is recorded, whether or not payment has been received. And use tax under an excise tax is due, always due at the time the items or services are purchased and when the owner furnished material is received. So the question is, what is gross receipts for a contractor? It's easy to say it's just about everything. So the gross receipts include the labor, the excise tax collected, the indirect payments, awards or bonuses, retainage, draws on the loans, sales or use tax on materials, sweat equity, penalties, liquidated damages, barter transactions, and building permits. And we will go through a couple of these as in the next couple slides. Gross receipts, you cannot deduct subcontract receipts from your gross receipts, any costs of services or labor purchased, any taxes, and expenses or losses. You're not able to deduct those. Sweat equity. Sweat equity is when the owner provides part of the construction exchange for a reduction in the amount due the contractor. The prime contractor needs to give the owner an exemption certificate. The owner does at that point become a contractor in this instance. The prime contractor cannot deduct the amounts already allowed the owner for their portion of the work. Indirect payments. Indirect payments are amounts paid to others, material suppliers, or subcontractors on behalf of the prime. And the gross receipts of the prime, even if the payment is made directly by the person the realty improvement is for. Just for an example, if the bank makes a payment to a contractor or supplier directly from the homeowner's construction loan, that's an indirect payment. Penalties or liquidated damages. Money or interest deducted for late completion. Penalties, interest, or liquidated damages paid by the contractor may not be deducted from the gross receipts if the deadline is not met. The penalty is taxable. If a contractor is penalized as a result of a lawsuit for poor or late performance, the penalty is also considered gross receipts and subject to excise tax. The penalty is billed to the contractor rather than paying the contractor the full amount of the contract. Awards and bonuses. Amounts received for early completion includes in gross receipts. The city would actually give awards and bonuses to contracts. This was in Aberdeen, if they did complete it early. Those are still subject to excise tax. Any amounts received for bonuses are included in the gross receipts. For example, if you have a contract and you get a $25,000 bonus on top of what the payment is, the total balance, including the bonus, would be subject to the excise tax. Barters. A barter is equipment, supplies, or services exchanged for labor. The value of the tangible personal property or services determines the amount subject to excise tax. And an example of this is a painter will contract with a realtor to paint the outside of a realtor's store in exchange for a new compressor. The compressor is valued at $2,000. The painter would owe excise tax on the $2,000. Building permits are also part of gross receipts. So any amount received for all licenses or permits required for the project is included in gross receipts. I must be doing really good. There's no question so far.
You are.
Well, I like questions though. So retainage, that's a percentage of each payment that is withheld until the project's completed, sometimes a deposit. Once a project is complete and the work is approved, the contractor receives the retainage. If you're based on a cash, if you're a cash-based contractor, then you'll owe excise tax when the actual retainage is paid. If you're accrual, you'll owe excise tax on the full amount invoiced, even if you've not received a payment. Bid factor. The state has allowed contractors to use the bid factor when preparing a bid or an invoice. You still are going to owe the 2% tax when you file the return. We have a great online bid factor that you can actually plug their numbers into, and it will do all the figuring for you. And they are listed on that screen. And I have been around a long time, so an agent actually developed the calculator 20 years ago, maybe 15, 20 years ago. It was an agent that developed that for our contractors to use. So kind of proud of that. It wasn't me. Just an example of using the bid factor and how it works. This is a really good slide. On the left-hand side is an invoice. So we're looking at material at $10,000, and we're just going to assume that the sales tax is already include that to make it easier. The sales tax is already included in the materials. Labor was 5, miscellaneous items was 1,500. So the subtotal was 16,500. If you multiply that times 2.041, the excise tax would be 336.77. You then add that to the subtotal, and the total invoice is 16,836.77. That is the number you're going to put on line 1 of your return. And line 1 of the return is going to, then you multiply that times 2%, and the excise tax due is 336.74. If the bids were figured without using the bid factor, it would be $330. And the contractor would end up with less money than the actual excise tax due.
Denise, you received a compliment here from Courtney, so she can attest to your expertise. You've always been fantastic at answering questions.
Thank you, Courtney. Appreciate that. On to owner furnished materials, and this is something that a lot of customers have problems with. And years ago, we used to get more calls from homeowners and customers asking questions regarding this. I don't know if the phone bank still gets them. Field offices don't get them as much as we used to. But basically what it is, owner furnished materials. It's when the owner is furnishing materials to the contractor. It's supplied by the owner, and it comes to the point that prime contractor owes excise tax on the value, except under qualified utilities. And sales and city use tax is due on the cost of materials, but only if those materials did not have it when the homeowner purchased them. They did not pay them. The value is included in the excise tax calculation, and it's reported on line 2 of the return or under owner furnished materials in ePath. Documentation to prove that can be a couple things. You can have an actual copy of the invoice showing the tax, or a written statement from the owner stating sales or use tax will due. Will owe use tax on materials furnished by government, because we all know the government entities do not have to pay tax on what they purchase. They are tax exempt. So if you are working a government project and the government entity is supplying you with the materials and you're the contractor, you're going to owe use tax on those materials and excise tax on the materials. My dad, I always tell the story, and some people that have been through it have heard the story. My dad had a friend that was a contractor, and my dad was very thrifty, and he sided his house. He bought all the siding on sale. And then he hired the contractor, and the contractor came over and asked my dad for a copy of the bill of what he paid for the siding. And my dad just said, "Oh, don't worry about it. It's all taken care of." And he went on to explain to my father that he needed to know that because he owes tax on it. Well, I was working for the department for about 2 years. I was kind of new, and my dad called me very upset, and I told my dad to go ahead. I knew my dad kept the receipt because he never threw anything away. So I said, just make a copy of the receipt, give it to him, and pay what he tells you to pay. But that's kind of frustrating for the homeowner when they're asked for information. But once they understand that the contractor has to pay that, most of them will provide it or will provide a statement. This is how you do the excise tax on owner furnished materials. On the left-hand side, the labor was $500, owner furnished materials $500. So the total taxable was $1,000. The excise tax rate using the bid factor 2.041, the excise tax due is 2041. So then the total invoice is 520 and 41 because you're not going to bill them for the actual materials again. So you're not going to bill them the thousand. You're going to bill them the 520.41. On the right-hand side is how you file it on your return. You have the 520.41 on line one, the $500 as owner furnished materials, and then the 1,020.41 at subject to 2% excise tax. So then the amount due is 2041. And the total tax on owner furnished materials is based on first use. So sometimes you have couple contractors using the same materials. So if you do, whoever used them first has the liability for both use tax if needed and excise tax. Okay. Prime contractor versus subcontractor. A prime contractor is anyone entering into a contract for construction services or realty improvement. A subcontractor contracts to perform part or all of the construction services or realty improvement for the prime and receives a prime contractor's exemption certificate. This is very important, especially for subcontractors. If someone has not been issued a prime contractor's exemption certificate, he or she is considered a prime contractor and is subject to the excise tax. So if you are a prime contractor, get those certificates. They take care of you.
Denise, we do have a question here from Sean. It does say, since governments are exempt from sales tax, can a contractor charge government's contractors excise tax? If yes, are there any tips you can provide to list the tax on pay applications? So no one is exempt from contractors' excise tax. So yes, you are able to charge government entities the contractor's excise tax. Sometimes we would recommend that if you are doing a bid or an estimate, that you do not line item the contractor's excise tax, that you just put that into your total at the bottom for your invoice or your estimate or your bid total. And that could be the same on your invoices, for the work as you're invoicing that customer, to just roll it into your total.
Okay. A prime contractor needs an excise tax license. They're the ones that contract with the owner. They report gross receipts, including owner-furnished materials. They give exemption certificates to the subs, and they pay contractors excise tax. Okay. The subcontractor, there's a misconception in sometimes that they do not need an excise tax license, but they do. They contract with the prime or another subcontractor. They report gross receipts, does not include owner furnished materials. They owe use tax on any materials that they provide if sales tax was not paid. They receive the exemption certificate from the prime, and they don't pay excise tax if the exemption certificate is given to them unless they're a qualified utility. And I will stress this with subcontract. I don't know if there's any subcontractors out there, but I do stress that with them, that get this exemption certificate. Sometimes a subcontractor, I know a couple of them, they go ahead and they have those forms on hand and they will take it to the prime specifically and have them fill it out, because sometimes the prime gets busy and they don't even think about it. But it's very important to the subcontractor to have that on file. The prime purchases the materials and owes the sales or use tax on it. The prime may owe use tax on what the sub purchases if they did not. If the subcontractor has materials and he's using it, and he is technically responsible for making sure sales or use tax is paid on those materials. But if for some reason he doesn't do it, it can fall back on the prime. So they'll want to make sure that they get that taken care of. Subcontractors report all receipts as gross receipts on line 1. I get a lot of filing for subcontractors and they just file zeros. Now, you need to report your receipts on line 1 of the excise tax return and then deduct it as a subcontractor receipts on line 3. And it's a good idea to do that for a couple reasons. One of it is we do look at licenses after 2 to 4 years. And if you have filed zero returns for that period of time, it comes in question on what that person is doing. Are they still in business? We need to cancel their license? If you are a subcontractor and we can look at your returns and say, hey, they're subcontractor, they've included it in the gross and deducted it under subcontract receipts, then we do understand that. Subcontractor cannot deduct receipts for qualified utilities. If a sub is working under a qualified utility project, they are a prime. There is no such thing really as a sub. So if you're working as a qualified utility, then you do have to, you cannot deduct receipts. And the subcontractor does owe sales and use tax on the materials that they are supplying.
Denise, there is a question here again from Sean. It's, if I'm working as a sub on several projects for one prime contractor, can I get one exemption certificate for the year, or do I need to get a certificate for each job? So what we do recommend is if you're the subcontractor for this prime and you're doing 6 houses in a cul-de-sac, you could get one exemption certificate for that entire cul-de-sac for that project. But if then you move on to a different project at a different location, you should get a separate prime contractor's exemption certificate for that new location. Does that make sense?
But technically, and I'm just going to do this, years ago, we used to do blanket certificates, and that was a certificate. You got an exemption certificate, and then you did an Excel spreadsheet, and you had all the projects that you did for a year. But technically, the way the law states, you are required to get an exemption certificate for every project. And I know it's a hassle. I know it's a pain, because a lot of times these subcontractors, they work for the same prime. But technically, A lot of cases, if you're audited or reviewed, they will look at that, like she said, like the cul-de-sac, and it's like 4 houses in a cul-de-sac, and they'll be okay with that. But technically, I'm telling you, technically. We used to do it all the time 20 years ago. Okay, prime contractor's responsibility is to issue the exemption certificate. But I always tell subs, if you need to go, they're going to issue it. If you take a blank one to them and say, please fill this out for me to cover me, then it doesn't hurt. If the subcontractor hires another subcontractor, the original prime contractor needs to give them the exemption certificate. A sub cannot give a sub a prime contractor's exemption certificate. The certificates are not issued to material suppliers or sales taxable service providers. If a contractor is using someone that's providing a sales taxable service, they need to be charged the sales tax on that. And a prime contractor needs to pay tax on all the materials that they are using. And exemption certificates cannot be issued on qualified utility projects. They cannot be issued by the prime to the sub. If a prime hires help from a temporary agency, this is a sales taxable transaction regardless of the type of work it's doing. A help agency sends help out. They will be charging the contractor the sales tax on that.
There is a question here from Jessica. It states, if we have a contract with a prime as a sub, our contract value is 400,000, but when the job is finished, we only bill 300,000. Do we pay on the full contract amount or the billable amount? This is a qualified utility. Technically, and again, it can depend on if you're a cash accounting license or if you're an accrual accounting license. If it was a cash accounting license and you receive the $300,000 from that prime, then that is what you would include and pay the excise tax on. If you're the accrual accounting license and you invoice for the 400,000, you would pay the excise tax on the 400,000. And then you may need to do a credit memo later showing that you only received the 300,000. Denise, is that correct? Or do an amended invoice?
Yeah, that is correct. The question I would ask, of course, I always ask questions back, is why was the contract value at 400,000 and you only billed 3? What was the reasoning for the $100,000 difference? Was it early, and or was it a penalty, or that's something that I would ask. But yeah, that is correct, Marla.
Okay.
Okay, we talked about blanket certificates already. Blanket certificates cannot be issued. They must list specific projects. And certificates cannot be issued by U.S. government, state of South Dakota, any state, public, or municipal corporation, or the owner of the project, unless the owner is a prime contractor, a building or remodeling with the intention of selling the property or building properties to lease. The spec builder. We'll get into that a little bit later. I did have someone years ago, I think I'd been here like 8 years, and a contractor came in and said he normally every month he had receipts. He was a busy contractor, and then for a couple months he had zeros. And so I ended up calling him and asking him, are you going out of business? What's going on? That type of thing. And he said, oh, I built a house for someone, but they're paying the excise tax. And so I said, are they a contractor? And he said, no, they just said they were going to cover the excise tax. Well, an owner can't cover the excise tax. They do not have an excise tax license. So I had to tell him that he was the contractor on the building of the house and he owed excise tax on it. He was not too happy. So, just keep that in mind. And penalties for issuing a certificate when you're not the prime. If that owner had issued a certificate to that prime and she wasn't a prime, the penalties for issuing a certificate when not the prime is makes you liable for the excise tax not paid plus a 10% penalties. Okay. Subs must retain the certificate in their records. Failure to do so is considered to be prime and subject to excise tax. So if you are audited or a review is something that we do as agents, just to let you know, I might say that a couple times. We do and it's like it's a review. We look over like 3 or 4 returns periods, ask a bunch of questions, look at some paperwork. And if you were ever reviewed and you do not have that exemption certificate on file, that's why I stress make sure you get that. You can be assessed a tax on that. So, we do allow you, we're nice, we do allow you to get it. And we give you quite a bit of time to go get it. But the issue that we run into when people don't do that, if they do a project 2 years ago and that contractor's no longer in South Dakota, he's no longer in the country even, or he's no longer doing business and you cannot contact him, the prime, you can't get that exemption certificate and then you're going to be liable for the excise tax on the project. Okay, this is a copy of the prime contractor's exemption certificate. If you need it, we do have it on our website. We also, any of our offices can mail you some. I do know some contractors will keep a file and they'll just keep a few on file, to give out, and they can make copies of it. Copies can be made. Contractors are responsible for paying sales or use tax on all the purchases of products or services regardless of who owns the materials. Materials installed in construction projects and all equipment and tools and supplies used by the contractors. So any type of equipment that they purchase, they must pay sales tax on it when they buy it or use taxes due. The prime can be held responsible for use tax due on materials furnished by the subcontractor. And that is the regulation referring to that. General contractors are liable for use tax on all items of tangible personal property used or consumed in the performance of their contract, including those portions of the contract performed by subcontractors. Use tax applies if the supplier does not charge applicable sales tax based on where the contractor receives the product. It's reported on the excise tax return when the contractor receives the product. If it's picked up at a store, state and city tax applies at the store's location. If they have the store deliver, it's where it's delivered to. State and city tax applies where it's delivered. And it applies to the cost of materials, including delivery and handling charges. An issue was brought up on recycled materials because a lot of times people will purchase a door from a old farmhouse, a unique door, and they'll use it in a construction project. If it's a recycled material and if it's identified as previously used and ownership does not change, no use tax is due. Just an example, if a contractor purchased materials at a lumber yard in Bruce at 1% and then uses the materials on a project located in Brookings, this is for the different location, where the tax is 2%, he will owe the additional 1% use tax to Brookings. No credit is given if materials purchased in city where the tax is higher rate than the city where the materials are being used. So you kind of got to look at where you're buying it and where you're using it.
So Denise, there is another question here from an accounts payable department. It says, is use tax still due if the business has a sales and use tax exemption? And the answer to that would be yes. So if the business has purchased those materials without tax and has them in inventory, they are the end user. That contractor is the end user of the product. So at the time that they use it and take it out of inventory, the sales tax would apply at that time. And that's how you would report the use tax on that return. You would include the cost of the material used, and it would be subject to the tax at where it is being used. So if it would be in Sioux Falls, it would be at 6.2%.
This is how you actually report that. Labor is 5,000. Owner furnished materials was 10,000. There was no tax on the owner furnished materials. So 6.2% of 10,000 is $620. So then the subtotal is $15,620. You multiply that times the bid factor. And the bid factor is a guide. It's a guide to actually help you out. If you want to just use 2%, you can use 2%, but it is a guide to help the contractors out. So it's multiplied times 2.041. The excise tax is $318. You add that to the subtotal, and that goes on line 1 of your return. What you include on the invoice, though, is $5,000. You're not going to include the owner furnished materials on the invoice. You're just going to include the tax on the invoice. So then the tax is $620, and then the excise tax is $318.80 for the total of $5,938.80. Use tax is collected as part of the gross receipts, and use tax may be included on line 2. And this is just a copy of what it looks like filled out on the return. And these are paper returns. I know a lot of you use ePath, but you can actually print out the paper returns too. So. Okay, new equipment purchased for use in South Dakota, subject to South Dakota sales or use tax. Used equipment brought into another state by a contractor who originally purchased it for use in another state. Materials and equipment delivered into South Dakota, of course, are subject to South Dakota sales or use tax, even if the supplier charges another state sales tax. That's why you have to be careful with invoices. Credit is given for tax properly paid to another state when purchased or received in that state. But you do have to have reciprocity with that state, or they do the same thing for us as we do for them. If the tax charged is less, the state in another state then applies to South Dakota, which doesn't happen very often, but it happens. Contractor owes difference in use tax to the state. So if you paid 5% and it was brought into Watertown, South Dakota, and you paid 5%, you're going to owe the additional state tax and additional city tax on that. If the equipment is less than 7 years old, use tax is on the fair market value of the equipment. So even if it's used equipment that's brought in, if it's less than 7 years old, you need to make sure use tax was paid. If not, it's on the fair market value of the equipment.
There is a question here, Denise. It's from Donna. If the owner provided materials and paid full sales tax on it at the purchase, should the contractor pay excise tax on labor only, or is the material taxed again? The owner furnished materials would need to be included on the return, and excise tax would be due on the cost of those materials plus the sales tax paid. It would need to be reported and included on the return, yes.
Like we said, the contractor, the prime contractor pays excise tax on labor and materials, no matter who provides the materials. Materials removed from inventory. And this is use tax is due when materials are taken out of unpaid inventory, unpaid tax inventory to use on a construction site. It is based on where the materials are used. Additional use tax is due if materials are removed from inventory in one city and then used or consumed in another city that imposes a higher tax rate. Use tax must be reported on the contractor's excise tax. And just an example here, a plumbing company purchases pipe without sales tax as part of its retail inventory. The pipes are kept in its store in Brandon. The pipe company has a contract to install it in a Sioux Falls home. The pipe company, as a contractor, is the consumer of the pipe, removed from tax unpaid inventory, and he must pay 4.2% state use tax plus Sioux Falls city use tax. Because when he had it in his inventory, there was no tax paid on it at all. And he did that because he sells product he does retail sales, so he can purchase all of his inventory without tax. Fabrication costs excluded from the fair market value of tangible personal property if the fabrication is done by the contractor's employees. Tax is due on the raw material costs only. If a third party is hired by the contractor to do fabrication, sales and use tax is due on the entire cost, including the fabrication labor. Contractors may fabricate materials such as vents or ductwork. Some examples of sales and use taxable services that contractors use, and contractors will use these: engineering, accounting, computer services, business consulting, surveying and staking, architectural planning, testing, rock crushing, carpet laying, locksmith, inspection, snow removal, construction management, concrete plumbing, equipment rental. Sales or use tax does apply to all services unless state law specifically exempts that service. Just for an example, if a contractor is using, let's say, inspections, or they're using concrete pumping, or they're renting equipment, they need to pay sales tax on all of those services that they are using. They cannot purchase services or materials without tax. Concrete pumping is subject to sales tax, and it applies if the concrete supplier simply delivers the concrete and pours it into a prepared site. The prime must pay sales tax to the service provider. The provider cannot accept an exemption certificate from the prime. If the concrete supplier prepares a site, that means he puts in the footings and levels the site, then pours the concrete, then that is an excise taxable project, and excise tax applies to the entire charge. The supplier owes sales and use tax on the cost or fair market value of the concrete and can accept an exemption certificate if working under the prime. The service provider is responsible for the state and municipal tax on services. So the service performed on tangible personal property, it's where the property is delivered to the customer. Repairs, rags, cleaning, fabrication, millwork, finishing. Services to real property, the property location where the service is provided. Examples of that are carpet installation, surveying or staking, pest control, lawn care, security systems. All of those items are subject to sales tax and not excise tax. Use tax is where the customer receives the service. Customer as consulting, architecture, engineering, legal, third-party administration, accounting, wherever they would owe the use tax on that if sales tax wasn't charged. Be aware of the tax rates in each location you are working. For example, a repaired item is delivered to a contractor in Hyde County where 4.2 state sales or use tax applies, but then it is used in Miller where the additional city use tax applies. Equipment lease on rental. It kind of, on renting a piece of equipment, it kind of depends on what you're doing. If the contractor is renting one without an operator, sales tax applies. The first payment is taxed where possession is taken, and then additional payments taxed at the primary location. In a lot of cases, it will start in one location. If they go and or they pick it up at a certain location, then it's taxed that first month. The second month, it may be taxed at a different location, depending on where they take that piece of equipment. If that piece of equipment is leased or rented with an operator, it's a specialty piece of equipment and needs the operator to do it, tax depends on the use. If the use is an excise taxable job, excise tax applies. If it's a sales taxable situation, then sales tax applies. Okay, at this point, we are going to take a break, a 10-minute break so that you can go and get a drink of water, walk around, use the restroom, stretch, and then we will be back. It'll be a 10-minute break. So 3:05. Okay, let's get back to it. It's raining here in Watertown, coming down pretty hard. So I went to let my yellow lab out and he didn't want to go out. So let's go construction managers. Construction managers is subject to sales tax. It can be sales tax or it can be excise tax depending on what that construction manager does. If they provide management consulting services and they oversee or supervise construction projects, contract does not include any construction and has no contracts with the contractor, does not pay the contractors. That would be subject to sales tax. Now, it becomes excise taxable if they contract with the owner to build a building or other construction. Then they become a prime. Is user consumer of services such as cleanup crews, porta potties, dumpsters, rentals, etc. Hires and pays contractors working on the project and issues the exemption certificates to the subs. Some examples of realty improvement projects: heating and cooling, plumbing, concrete, remodeling, electrical, carpentry, and painting and wallpapering. We are going to start some of the types of businesses that can sometimes have a dual use. Heating and air conditioning is a business that sometimes has both licenses or they have both taxabilities. Heating and cooling, if you do installation of heating, central air, ventilation, any type of repair work of like furnaces or air conditioner, that type of thing, then it's excise taxable, realty improvement. If you do cleaning, you change filters, you do duct cleaning, you calibrate, smoke gas testing, add Freon, that's like air conditioning units, or sales, installation, or repair to window air conditioner units, because window's not considered real property. Tax on a maintenance agreement depends on what is covered by that agreement. So if you have a maintenance agreement that will just check your air conditioner in the spring and check your furnace in the fall, and it's just a checkup, it's a maintenance agreement, that is sales tax. But if it also covers repairs or different installations, that could be excise tax. It just depends. The service provider is responsible for state and city tax. If it's excise taxable, includes replacement parts or fixes something. Sales tax does not include replacement parts. It does not fix parts. Maintenance work, even if it's installation of equipment, was subject to excise tax. So sales and excise taxable on the same bill. You can itemize and charge sales tax on the sales taxable portion and excise on the excise taxable if they are line item and charged on the bill. Or you can use the 25% rule. Our 25% rule says if 25% or more is excise taxable, then excise tax applies to the total contract. If it's less than 25% is excise taxable, sales tax applies to the entire contract. Warranties. Warranties are taxed according to what the warranty or maintenance contract covers. There's different types of warranties. There's a manufacturer's warranty. There's a warranty that's sold by contractors. There's service or maintenance contracts, and we'll go through each one of those. Extended warranties, if it covers the parts and labors, excise tax applies to the charge for the extended warranty. If an extended warranty covers parts only, the charge for the warranty is subject to sales tax. A manufacturer warranty. Manufacturer warranty normally covers parts and services, so there's no sales or use tax on it. It provides replacement materials covered by the warranty with no charge to the contractor or the customer. No sales or use tax on the parts. The parts are not included in OFM. Just an example. Oh, the 20.
Yep, there's a question here for you.
Okay.
Yep,
Okay.
just wanted you to go over that
I can.
25% rule again.
It's confusing. If 25% of the project is subject to excise tax, then the whole project is excise taxable. I'll give you an example, and we go into those a little later. If you are doing a remodel on the house and you're replacing the flooring in there, you're replacing carpet, linoleum, and marble or terrazzo or ceramic tile. Now, carpet, linoleum, that is subject to sales tax. Ceramic tile is subject to excise tax. And if you are familiar with ceramic tile, it's expensive and it's a lot more work. So if 25% or more of that project is that ceramic tile, the whole project becomes subject to excise tax. Does that explain it a little better?
Yep.
So with a manufacturer's warranty, just an example, a furnace fan covered by a manufacturer warranty is replaced. The contractor bills the manufacturer $150 for the fan plus $50 for labor. Since it's a manufacturer's warranty, no sales or use tax is due on the $150. The $200 is subject to excise tax because it's an installation. Warranty sold by contractors. The warranty charge is subject to excise tax because a contractor, in most cases, they've done an installation, they've done some sort of realty improvement. So they're selling a warranty. The warranty is subject to excise tax. There's no tax on labor for service covered under the warranty if no charge made to the customer. So if you purchase a warranty by a contractor and something goes wrong, they come back and fix it. You paid for that warranty, so there's not going to be any excise tax charge to you. Use taxes due on parts only. Charges made to the customer for labor or parts subject to sales tax. Parts covered by the manufacturer warranty not subject to sales or use tax. All other parts are taxable. So if you bought a warranty and it covers, just the installation, then that would not be subject to excise tax because you paid for that warranty. A lot of contractors will not have an official warranty set up that way. It's not a bad idea, but if they don't, a lot of them will just come and fix whatever wasn't good, and they won't charge you for it. Then there's no tax due. Service or maintenance agreements. That contracts, this is kind of like a furnace to clean or calibrate that does not include any installation, and that's sales taxable. I used to have them come and look at my furnace in the wintertime, and they just clean it, replace the filter, make sure everything's running okay. Back then it was $50, and it was subject to sales tax. No sales tax on parts and labor covered by the service contract if you have a maintenance or service contract. Okay, landscaping and lawn care, that is another dual tax situation. Landscaping design, spraying, fertilizing, mowing, or ornamental shrubs and tree placing and pruning, trimming and removing, utility line trimming, seeding or laying sod, putting down rock. That's all subject to sales tax. If you lay bricks, build a retaining wall, underground installation of sprinkler systems, installation of fountains or ponds that contain a heater or flowing water, stump removal in fields. Stump removal in town is subject to sales tax, but in fields, it's excise tax. Sidewalks, shelter belt cleaning. that is all subject to excise tax. So we run into a little bit of the 25% rule here too, just like we went. If you're doing something and 25% or more is excise tax, the whole thing is excise taxable. The issue we run into here is if you have a sales tax license, you are able to buy things without tax that you're turning around and billing your customer. If you do the 25% rule and it's all subject to excise tax, anything that you purchased without tax, you are going to owe use tax on. Okay, trimming and the removal of stump, the trimming and removal of stump and the grinding. If it is done in shelter belts, it's classified as land clearing and it's subject to excise tax. Brush or timber clearing services for shelter belt is also excise taxable. Excuse me. If you do seeding and sodding along the right of way on a road, and it's a highway construction project, seeding and sodding is normally subject to sales tax, but if it's part of a highway construction project, it turns over to be a contractor's excise tax. Carpet and floor laying. Again, here is a little bit of a dual thing. We talked about that a little bit, explaining the 25% rule. If you lay carpet or you remove carpet, that is sales tax. And includes Duraceramic and Durastone. I had to ask at one point what that was. I got really educated on carpet and floor laying. Linoleum installation, vinyl floor, asphalt tire, fireproofing floors, wood flooring. That's all examples of sales taxable. So you would pay sales tax on that. Most insulation of floor covering is sales taxable. Flooring subject to excise tax is actually ceramic tile, terrazzo, learn that word, marble, and epoxy flooring. That would be subject to excise tax. Gravel, another dual project. Gravel, if you just blade or grade of the road after the gravel's been spread, road maintenance, road building, that is subject to excise tax. But if you just dump it, if you just dump the gravel or you sell the gravel or you stockpile or you crush, if you spread with no blading, and there's a difference there, that is sales taxable. The contractor will owe sales or use tax on the purchases of gravel, rock, or crushing services. There is an agreement with townships. If there is a contract for maintenance of the road and contract does not specifically state that gravel is to be incorporated, no use tax or excise tax is due on the gravel added to the road. And here it says crushing is subject to sales tax. This was a question that we got. Gravel crushing by the contractor or their employees is considered fabrication. And we talked about fabrication before by the employees. It would not be subject to use tax. Snow removal. Snow removal is subject to sales tax. And we've had a lot of issues in the past, not so much recently, but a lot of issues in the past where contractors were charging excise tax on snow removal. A lot of times a contractor during the year does his contracting work in the summer. In the wintertime, it's a little slower for him. So he started doing snow removal. Well, snow removal is subject to sales tax, and we do allow the contractor to report that on his excise tax return. There is a line for sales tax there. When snow removal is for a political subdivision, such as a city or county, the receipts are not taxable. County, city, state, they are exempt from sales tax, so that would not be taxable. Highway contractors, highway contractors all work, in other words, all work performed by vehicles, machinery, or equipment within the right of way in construction, reconstruction, repair, maintenance of public highways, storm sewers, ditches, and gutters are all included in the right away. So they are required for all primes and subs to perform this construction work on public roads, including snow removal and blading. Contractors' excise tax, highway contractors receive also another license from the motor vehicle division that is for the fuel that they use in the construction projects. Again, license must be obtained before beginning the work in South Dakota. And it's kind of funny with highway contractors and right of way, when you're working in the right of way, a lot of things that we are used to being subject to sales tax now becomes excise taxable. Landscaping, mulching, traffic control, striping, seeding, sodding, erosion control, signing, pilot car operation. They all become subject to excise tax and can be given a prime contractor's exemption certificate as a sub. Gravel crushing, surveying, architect, gravel sales, and hauling, engineering, and snow removal all are still subject to sales tax. Okay, we've talked a lot about qualified utilities, and these are the differences in the qualified utilities. Basically, if you do the qualified utility project is taxed under 1046B. It's a different law. So the prime contractor's contract determines the tax application for all the subcontractors. If the prime's contractor is for a qualified utility, the subcontractors are also taxed. So they are not subcontractors. A lot of people say, well, what's included in a qualified utility? What is a qualified utility? And it's basically electric, heating, power, like wind power, solar power, water and gas companies, railroads, rural electric, rural telephone, rural water supply companies, rural water systems. So those are the type of things. If you're ever in a question, if it is a qualified utility, you can contact us. We do have it marked on our system if they are considered a qualified utility. And most of us will know if you just give us the business. But under a qualified utility, the prime does owe the 2% excise tax on the gross receipts. They do not include the value of the owner furnished materials in the gross receipts. They do owe 4.2% state and applicable city tax on that owner furnished materials. They also owe 4.2 state and applicable city or use tax on materials that they use. They cannot give exemption certificates to the sub, and they cannot deduct the amounts paid to others from the gross receipts. So then the subcontractor will owe 2% on his gross receipts. He owes the 4.2 state and city tax on use tax on materials he used. And the prime contractor's exemption certificate are not valid under the qualified utility. Spec builder, this is my favorite subject, you guys. Time to wake up. What is a spec builder? A spec builder owns the land, builds to sell. He's building these houses or whatever to sell. It may be new construction or remodeled. It can be a flipped house. Those flipped house, you buy a house and for cheap and you turn it around and you fix it up and you resell it. That's a spec builder. Does not have to do any of the work. Is required to have a contractor's excise tax license. He can issue prime contractor exemption certificates to the subs. He owes sales tax on the cost or fair market value of all materials and sales taxable services used. He owes excise tax if the building is sold within 4 years. and he cannot deduct the cost of the original structure, including the land, if remodeling an existing structure. So basically what he does is if he's building a new house, he will owe excise tax on the selling cost of the home, less the cost of land and any land improvements that were done. But all the land improvements to that uh, development or whatever does have to have sales tax or excise tax charged to it. It cannot, if for some reason, for example, you're building a home to sell and purchase the land, you improve the land, and you didn't pay excise tax, you didn't on any of the land improvements. So when you turn around and sell the home, they're going to owe 2% excise tax on the home without any deduction for the land improvements. And then there's all these stipulations that makes it fun. Okay. And that's if they sell it within 4 years. Okay. If the contractor moves into the home, some of them do, they can't sell it, so they decide to move into it. Excise tax is due when the structure is first used. So he's going to owe the excise tax when he moves in. It's on the amounts paid, and the amount that would be due would be what is paid to all the subs, whatever he paid to all the subs. Because keep in mind, he gave an exemption certificate to all the subs, so no tax was due. If he moves into the home, he's going to owe excise tax on all those subs, what they did. If he rents a spec home valued over $100,000, we've got a $100,000 rule, which is the next slide. He has to follow that. If the home is sold after being rented or used by the contractor within 4 years, excise tax, now granted, he moved into it, he paid excise tax on what he paid to the subs, so that was paid. So if he sells it after that, he lives in it a year and then sells it, excise tax is due on the selling price, less the cost or for fair market value of the land, less the amount of the excise tax paid when the home was occupied. So he's able to deduct. He sells it, he's going to owe excise tax on the selling, less what he paid for the land and less what he paid the subcontractors. Simple, right? Let me get some high fives. Okay. I guess I've been doing it for 20 years, so it's not that difficult for me, but I know when I first started, I remember the headache it was. I didn't want to deal with spec builders ever. Okay, the $100,000 rule, which includes new buildings with a value greater than 100,000, which are most new buildings anymore, but are built to lease. They're building these to lease to people. Okay, the owner is a prime contractor and is subject to 2% excise tax on the fair market value of the building when it's first leased. The owner has a contractor's license, or the owner has a contractor's excise tax license, or he performs part of the construction. If the owner is not licensed contractor and the owner and his employees do none of the construction, the owner is not a prime contractor and is not subject to the excise tax. Each contractor in this case is hired by the owner, is considered a prime, and is subject to excise tax. Now, when the owner is not the prime contractor, keep this in mind, each contractor hired by the owner is a prime and is responsible for the 2% excise tax on their receipts. Excise tax also applies to the materials furnished by the owner. So cost or fair market value of the owner furnished material includes sales or use tax on the materials. Now this is for a lease. If the building is sold within 4 years of completion, excise tax is due on the selling price of the building, less the cost of the fair market value of the land and the land improvements. The contractor's excise tax paid at the time of the building was leased, or used can be deducted. Portable buildings. These are these lawn sheds and portable buildings that are behind people's homes. They are subject to sales tax. When you go to buy one, they will charge you sales tax on it. That's a lawn shed or portable building. They are not permanent buildings. That's why they're subject to sales tax. Sheds sold to utility companies are subject to sales tax unless the sale includes installation to a foundation. That's the big thing. Contractors hired to install the sheds on a foundation are subject to excise tax and must include the value of the shed in the amount excise tax is paid because the shed becomes the materials. If the shed is installed on a foundation, it is subject to excise tax. The value of the shed must be included in the excise taxable amount. Contractors installing plumbing or electrical connections in a lawn shed or portable building are subject to excise tax on their receipts. But the shed in this case is not owner furnished materials. If you have a shed that's fully wired, they're still considered TPP and subject to sales tax unless it's sold with installation on a foundation. The key thing here is installation. If it is sold with installation on a foundation, in this case, they are subject to excise tax. School-built homes. You've seen some of these houses on the schoolyard. You might have seen them built on blocks. They're built by students. They are subject to sales tax on the selling price when sold. Materials and labors can be purchased exempt because the school is an exempt entity. If they're built on the owner's site, the total contract price is subject to excise tax, contractor's excise tax. Here in Watertown, they build them behind Lake area. They've got a deal, and you can see them every year. They build a house behind there. They got building trades degree up there, and so they teaching them how to build houses. Contractors hired to install cabinets or electrical work will not owe sales tax, use tax, or excise tax on these projects. All materials and labor can be purchased for resale, or in the case of the school, exempt, as the school is an exempt entity. If the building is merely sold to the owner on the site and the district does nothing as far as installation of the building, the only tax as far as the district is concerned would be on the sales tax on the gross receipts. Pretty quiet, Marla. I think some people are sleeping.
Yeah, it is quiet. Haven't had a question for a while.
Okay, tribal tax collections. Tribes with no collection agreements are Flandreau and Lower Brule. The tribal revenue department has jurisdiction over licenses owned and operated by enrolled members of their own tribe. The state DOR handles others. Like I said, the 5 tribes with sales tax, tourism, and contractors excise tax agreements are Standing Rock, Rosebud, Cheyenne, Ogallala, and Crow Creek. Believe it or not, when I started, I couldn't say Ogallala. I have grown. Tribal governments, 2 tribal governments with limited tax agreements for use and contractors excise tax is Yankton Sioux and Sisseton Wahpeton. Contractors excise tax collected when working on a reservation with an agreement. It's the same rate as a state excise tax, but it's not the state excise tax. It's instead of, not in addition to the state excise tax. And that's working on an agreement reservation. Applies the same as a state excise tax, subject to the same laws. It's reported on the state excise tax return, but it's reported in the special jurisdiction section on the return using the code assigned to that. And just like sales tax, the state has agreement with these tribes to collect the tax for them and then remit it to them. We do not keep that at the state. We remit it to them, and we have an agreement with them to do that. Tribes without the collection agreement. So there's no signed agreement with the state, no excise tax if the contractor, now listen, if the contractor is an enrolled tribal member of the tribe that controls the Indian country where the project's located. So if the contractor is a member of that tribe and he's doing a contract at their Indian country, then there's no excise tax due. Excise tax is due if the project is by a non-Indian contractor on Indian country. It's subject to 2% excise tax if it is a non-Indian contractor or it's a member of a different tribe. Okay. Sales by an enrolled member on a non-agreement Indian country controlled by that member's tribe are not subject to state sales tax. Mouthful. Basically, if that person is doing sales and he is a member of that tribe and he's selling it to somebody else that's a member and they're selling on that tribe, that non-agreement country, no tax is due. And the tribe may impose their own tribal taxes. So if you do work in Indian country, you need to make sure that you contact that tribe to make sure they don't have additional permits or taxes that are due. And if you ever have any questions, I will say this, if you ever have any questions, feel free to reach out to a phone bank, to me, to the toll free, to the email address that's going to be on the next couple pages. Ask. It's better to ask than to guess. Non-agreement Indian country exception. So if the project must be located on tribal land controlled by that tribe, performed and paid for by the tribe. So we're talking Indian use only, put it that way. So projects that are done for Indian use only, basically meaning that the people in Watertown aren't using something in there. And that's like tribal housing, schools, hospitals, or tribal offices. That's considered Indian use only. Not for Indian use only is like casinos, because anybody can go to the casino, ranches, roads, stores, motels, factories, non-Indian housing. Okay, so that's the exception there. And if you are doing a project for a Indian use only, by tribal housing, schools, or whatever, you'll want to have a certificate filled out or a form filled out by our department in Peer, so that you will not have, they'll prove it is what they'll do. They'll prove it for no tax. Okay, we have ePath, and I'm old school. We go back to Quest, which was horrible. ePath is amazing. You guys, I love ePath. It is our electronic filing. It is our preferred method, and most people are on it now just because it's very user friendly, and that we've got the ePath site. And any questions, you can give us a call at the toll-free number or email ePath for specific ePath questions. The benefits of ePath are it's available 24/7. You can do your return at 2 o'clock in the morning if you can't sleep. Multiple payment options allows additional user access to all or specific accounts. You can set up more than one user. Automatically saved for later access and editing before sending. So if you're not sure you're doing it at 2 o'clock in the morning, you're not sure you want to look at it at 7 o'clock in the morning, you can save it and finish it the next day. Change passwords, security questions, and email addresses at any time. Use a bank account for a one-time payment or save that account. One ePath account for the same owner with same FEIN number. The system does all the calculations because math is hard sometimes. Amend returns online, review file and pay history, and you can look it up. View pending payments and make changes to payment up to 2 business days prior to the settlement date. You can pay by credit card if you want. There is a 2.45 convenience fee charged for each debit or credit card payment, but you are able to do that. All documents that you keep is to be kept for a period of 3 years after the return is filed, longer if depreciating capital assets. Keep and present upon request. The amount of the gross receipts and sales tax on all sources, including barters, amount of all deductions, exemptions, or credits. I always say it's really good to keep documents because if you do not keep the documents, thinking maybe it's easier not to have them. If you are audited or reviewed, then they can assess. They can assess based on their judgment. So if you have the documents, it's so much better for you.
Denise, we do have another question there from Sean. He's referring back to our seminar on Tuesday. He said, we talked about the 1% city cap tax and the 0.5% county tax that have been implemented through this last legislative session, and that they could be imposed in 2026, or I'm sorry, as of July 1st of 2026. Can we speak to how these tax rate increases would apply to construction contracts? If a contractor enters into a construction contract before a tax rate increase goes into effect, can the contractor purchase materials at the previous lower rate even after the effective date of the tax increase? It seemed to me that Lori touched on that a little bit.
She touched on actually the contract itself, the excise tax. But I do believe now we're getting more information on that. But I do believe that if the contract was prior to, then yes. But I am not 100% sure because we haven't really gone through it in detail at this point. Keep in mind those percentages is a per county tax basis. So you may have one county that does it, another that doesn't. Same with the city. Watertown might not ever have it, or I'm sure they will, but they may not have it for 5 years because it's a capital improvement thing. So I would have to say I don't know for sure. I think it goes by the contract date, and that's for the excise tax and the materials. But I am going to just say I'm not 100% sure, Sean.
And we can keep your question handy here and maybe check again with Lori, but it seemed to me too, she did mention that if the contract was already signed, they could honor those contract prices.
Yep. In the past, we did it that way, so I assume that we're going to do it that way now too. For any increases, it's based on the contract. Okay. Good question, Sean. Okay, keep the following books and records, and it's for your benefit to keep this stuff: sales and use tax and contractors' excise tax returns and work papers, federal income tax returns, summary accounts, sales invoices, purchase invoices, beginning and ending inventories, bills of lading, canceled checks, contracts, depreciation schedules. And definitely keep your exemption certificates, supporting documentations for all. Okay. This is a slide I was talking about earlier with all our contact information. This is a very valuable slide. It has our toll-free number on it, our general business tax email that is monitored every day. It's got our website. It's got the link to a lot of our tax facts and publications, which have a lot of good information in there. So, okay, these are our field offices: Aberdeen, Pierre, Rapids, Sioux Falls, Yankton. For any questions or if you need to go and visit somebody, Okay, that's the end of our presentation, and I want to thank all of you for your time and attention today. I hope this overview of South Dakota's contractors excise tax has helped you clarify how this tax works, who it applies to, and the key rules to keep in mind as you navigate your projects. As you continue to work with contractors, subcontractors, your own construction company, remember that good record keeping and clear documentation go a long way. And if questions come up later, or if you run into a unique situation, please don't hesitate to reach out. We are here. That's what, as agents, that's what our job is to help people out. Um, Before we wrap up, I do want to open it up for any final questions you might have. Otherwise, thank you for being here, and I hope you have a great rest of the day. So Marla and I will stick around for a few minutes if you have any questions.
All right, we do have a question. Do we get a copy of the slides, or can we look at slide 65 again? It's from Aaron.
I will go back to 65, but in the reminder that Lori sent you, you should have had a copy of the slide presentation, but here is slide 65 again.
And on our website, I don't recall seeing, oh yes, here it is, the chat feature. We could talk about that a little bit on our business tax page online. We do have a live chat feature where you can get an active, live interactive session with one of our business tax agents as well. There's usually 3 agents on that line for the entire workday. So that's a good place to direct questions as well. And KP, if you want to go ahead and send us, I'll put my email address in here again. If you want to go ahead and send me your email address, I will go ahead and get you a copy of the PowerPoint. You're welcome.
I think we can go.
Okie doke.
I'm just going to remove these two. So,
Okay, sounds great. Thank you, Denise.
yep.
You did
Yep.
great job.